Today, we're going to dive into a real financial head-scratcher. It's a paradox that happens all the time in the market, and it can be super confusing if you don't know what you're looking for. Think about it. A company comes out and says, hey, we had a fantastic quarter, sales are through the roof, everything seems to be going great. And then you look at their stock, and it's dropping. It just doesn't seem to make any sense, right? Well, that is exactly what happened with Hyundai Motor. And this is the puzzle in black and white. On one side, you have Hyundai's sales in India for December jumping a really healthy 6.6% compared to the year before. I mean, that's great news. But then you look at the other side, and on the very next day the market opened, the stock price fell almost 3%. So what on earth is going on here? All right, so to really solve this mystery, let's first dig into just how good that good news really was. And look, the numbers were genuinely impressive. Hyundai Motor India sold over 58,000 cars. Their exports were a huge bright spot, surging by more than 26%. And to top it all off, their new Hyundai Venue model was a massive hit, racking up over 55,000 bookings. I mean, by any measure, this is a company that's firing on all cylinders, so the stock should be soaring, right? Well, this is exactly where our story takes a sharp turn. Because you see, a company's performance is one thing, but the market's reaction, that is a completely different beast. Okay, now this is where it gets really interesting, because it's all about context. Sure, the stock had a bit of a rough month and quarter leading up to this news, but look at that number for the past year, a gain of over 28%. That is a fantastic run. Go ahead and burn that number into your brain, because it's pretty much the most important clue to solving this entire mystery. And there it is. The smoking gun. The stock didn't fall because of those great sales numbers. Nope. It fell because a major investment bank, Goldman Sachs, had just recently changed its official opinion on the stock. This quote right here gets to the absolute heart of the matter. See, Goldman Sachs wasn't saying Hyundai was a bad company. Far from it. They were basically saying that all the awesome things about Hyundai, its big gains in the US market, its huge success with hybrid cars, all of that was stuff the market already knew. And because everyone already knew it, that success was already baked into the stock price, into that huge 28% run-up we just saw. So this brings us to this absolutely crucial concept, priced in. You got to remember, the stock market isn't reacting to yesterday's news. It's always trying to guess what's going to happen tomorrow. By the time Hyundai actually announced those fantastic December sales, investors had been expecting good news for months. So the good news wasn't a surprise. And if it's not a surprise, there's no reason for the stock to jump again. For some investors, it was actually a signal to say, hey, I've made a nice profit over the last year. Time to sell. Okay, so we've kind of solved the initial paradox, but stick with me, because this whole story actually uncovers another, equally important lesson for anybody interested in the market. And trust me, it's a big one. It sounds like a really simple question, right? Hyundai makes cars. Duh. But the name Hyundai is actually attached to this massive, sprawling network of different businesses. So are they all the same company? For example, just take a look at this chart. This is the ownership breakdown for a company called Hyundai Elevator. As you can see, it's owned by a whole mix of regular people, big investment firms, private companies, the whole shebang. And here's the kicker. Hyundai Elevator has absolutely nothing to do with Hyundai Motors car sales. It's a completely separate company that's also traded on the stock market, and all it does is make, well, elevators. It just happens to share a famous brand name. And this shows you how one single brand can represent a whole universe of different, unrelated businesses. So let's bring this all home. What does this all mean for you? When you see a big headline about a company, what should you really be thinking about? It really all boils down to two huge lessons. First, the market is a forward-looking machine. Today's stock price is all about expectations for tomorrow, not a report card for yesterday. And second, a brand name is not a business. You have to know exactly which company you're looking at, because Hyundai Motor having a great year doesn't automatically mean Hyundai Elevator stock is going to do anything at all. So the next time you see a business headline that just seems weird, good news sends a stock down or bad news sends it flying up, I hope you'll remember the Hyundai paradox, because the real story, the one that truly matters, is often not in the headline itself, but in the expectations that were already priced into the market long before that news ever broke.